Hi, Sean McCracken here from Hotels News Now with Jeff Higley at 2017 ALIS in Los Angeles. Jeff, I think one of the big things I've noticed today, and really over the last couple of days, is we spend so much time at these investment conferences kind of opining over what's coming in the future, where we're at in the cycle, what inning we're at. And there's been some of that conversation going on. It's inevitable whenever you get this many minds around the industry talking. But I think there's also a real appetite here to kind of get past that, to talk about really like what we can do in the industry to get better, what needs to be done regardless of the point in the cycle, regardless of all the other noise that's around the industry. I think a lot of people have a real desire to kind of get back to the hotel business, what works in it, what needs to get better at it. I think that was a huge focus yesterday at the new ALIS Tech Talks that started the day. There was a lot of talk not about, in 5 years, are we going to be at the start of a new cycle? In 5 years, these are the expectations guests are going to have, and this is what you need to do to meet those expectations. So what are you seeing along those lines?
Yeah, Sean, like any conference of this, the first day is always the appetizer. Mm-hmm. Today we got into the main course.
Yeah.
And, innovation is part of every course that you look at in terms of the industry and where we're going. But when you really look at the basic fundamentals of why an investment conference exists, it's to talk about deals. Mm-hmm. Deals. And that's what we got into today. Mm-hmm. So a lot of the conversation that I heard on panels in the hallways, focused on what kind of deals are going to take place. 2015 was a record year deal-wise. Mm-hmm. And 2016, as somebody said on the panel today, sucked. Mm-hmm. It was a bad year for deals. Mm-hmm. So what it appears to be is that 2017 is going to be a little bit in between. There's going to be more deals. It sounds like there'll be less mega deals because a lot of the companies that finished bridesmaids for Starwood or for Fairmont or some of the other major acquisitions are now looking to fill in the voids in their portfolios with smaller deals to be strategic. So they might need a boutique brand here or a mid-scale brand there. So, when you're starting to talk about deals at that level, it'll be a little bit faster paced, as the year goes on and people get comfortable with the environment that President Trump is going to create. Yeah. Now, when you get down to that individual property level or that portfolio deal, there's going to be, it appears that there will be a lot more of that transactions taking place, especially if the Trump administration repeals some of the regulations and oversight that's being done in the lending industry now. If that goes away, Mark Lansbaugh from Wells Fargo today said, if that goes away, the spigot opens. Yep. And there's all of a sudden going to be a lot more money for those deals to take place. So again, the meat and potatoes of this industry is buying and selling hotels and making sure that the new owner gets to that level where they can make the guests' experience happy. So I feel like that's the direction that the content today took.
Yeah, I think I heard a similar message. It seems like the recipe's almost there to kind of open the gates. There's private equity money out there ready to buy. Pricing, still a bit of a gap, but it's getting closer to what's palatable for people. REITs are close in stock price to where they're going to be back on the market. So yeah, I think that's a pretty reasonable expectation for 2017, that we'll see a lot more deals than last year.
And you hit it on the head, because I don't think you can underestimate the value of what the stock market rally has done since Trump was elected, and the effect that it's had on the REITs. Before, in 2015, what drove that record amount of transactions was the fact that REITs were flush with cash. Went away in 16, will be back in 17 to drive up these prices and really start driving more transactions in the industry. I guess that's what we're going to see as far as the dessert goes.
Yep, only time will tell. So this is Sean McCracken here with Jeff Higley. Thanks so much.